Greetings, market rebels. Welcome to this week's macro measure. I'm Wayne. It is Sunday, February 25th, 2024. And let's get going on things. I've got to admit here that I've got to crank this and sector situation out. Here's our trusty disclaimer. Here is our trusty intellectual property rights notice. And here is, once again, I'm sticking with this counterpoint theme for the week because this is I think things just keep building, right? The market continues to grind higher, well, the SPY, and you then have other things cropping up, right? Sort of that are concerning under the surface. So it's very interesting. Once again, I think the trade the charts in front of you has been the key to sticking with it and not fighting it. And right until you see the signs of some kind of a trend change, right? If it's a so-called black swan, overused, but let's just go with it. If it's a black swan that does this market in, remember, it's very hard to spot that in the present, right? It's kind of like by definition something that's off mostly everyone's radar. So you really shouldn't kick yourself if you get smoked on something like that. But the only reason you may want to kick yourself would be if you didn't roll, as we talk about nearly all the time, especially when things start to become stretched and extreme. And so you've got some of that going on right now. So you have really no excuse. But these are the notes for the week, kind of brief, a little bit of an update. I'm going to cover them. I'll probably just get them off the screen and talk about them. But I think the big deal is that I'm just going to stay away from a lot of tabs for now and just try to really get to the charts and keep it very simple and short. I've got a lot of office upheaval still, and I've got renovations going on. They're kind of light renovations, not heavy duty ones, but it just got a lot of things sort of out of order inside the house, and I've got a lot of prep to do to keep the renovations going for this week because we have to prepare for our guy to get into certain rooms, and it takes a lot of moving of the things here and there. So I'm just trying to prep so we can keep him speeding along. Anyway, uh, probably the biggest other thing I would mention on the new notes really would be the the uh, the fact that inflation is not dead. So on that note, I'm going to stop sharing very briefly, and we're going to get out of PowerPoint, and I'll just shift this over so it's out of our way. And we will come back and we will share this my main screen, which should look like this. So hopefully everyone's seeing this. So this is from the Cleveland Fed, and the reason I'm bringing this up, it's probably maybe the only tab I'll show this week, is because this has been something, right, that we talked about. We came across some reasons to believe in this is a possibility. It's one of the reasons why we haven't bought into the rates lower sooner argument. Either time it was promulgated by the usual suspects. And you can now see that the Cleveland Fed very recently, right, started upticking in terms of their inflation nowcasting. So once again, even by the bogus government numbers, inflation is not really cratering completely. Just something to keep in mind because, right, it's going to be difficult to lower rates if inflation remains as stubborn as it appears to be. Now, there's the other scenario where you've got several people chimed in this week with they think that we're going to see a recession. It's not obviously consensus, but there were a few more people that said, we're going to see a recession this year. Whether the government wants to believe it or thinks they can prevent it with the usual chicanery, whatever. But that camp kind of grew a little bit. And so that would be the problem, right? That if rates start coming down in response to something like that, that would really be the problem because right, that would be rushing rates lower because things really deteriorated. That's why we've seen that poor performance many times after the first rate cut the following year, and that really has to do with the situation being worse than was expected, and so the rates then start coming down in response to that, and that means there's still economic fallout on the way. But this is really, to me, kind of like the news of the week that's not really being discussed all that much. That I wouldn't call this right a major uptick, but things are starting to uptick again. It's certainly not where you want to be, right? So you really want to see this starting to roll over even further. It's just not there. And so the rate cut probabilities have really been still, I think you're out till June now, where it starts to looking like it's more of an odds on thing to happen then rather than anytime until then. So that to me is a problem. But having said that, let's look at the first chart. I'll just, because we're on interest rates, I'll go over to the 10-year yield. We cover this in macro measure anyway, and you can see this really stalled out. So you could say, well, rates are probably going back up, and they might. They just haven't yet. You can see it. I'll try to enlarge it there. You can see it better, hopefully now. Stalled at the 100-day. I know this isn't the same thing since it's really derivative, but of charting the actual instrument, right? But we're just taking off on that to keep the discussion clear. So the rates are just stalled out right near this 430, 4.3 level, and right near this 100-day. So anyway, we'll see if it can burst through, and that maybe would be the start of market problems. But it hasn't yet, and it's finished week on Friday. So if yields tumble back down, right, that would be good, as would the dollar rolling back over, something we also usually chart in macro measure especially when we keep the videos, the 2 weekend videos separate, like we are this time. Come on. There we go. And you can see that the dollar too, right, has, even though it tried to put something together, it's sort of on the precipice there. I think if you get a nice little, I think if you put a nice little support line underneath the action right there, it's threatening to break that. And it's broken below some SMAs. The 200's there in light purple or violet, and you've got the 50 down there in gold. So that's maybe the start of something that's helpful to stocks. We'll see, right? If it starts perking back up above the 100 and starts recovering like it has many times, then we start getting a little more concerned. But the reality is, look, that looks pretty good at the moment in terms of tailing off, which should be good for equities. But what I want to bring up for equities in the charts is that, right, we've been saying this, that there's a lot more upside here if they want it, right? So we don't even really have to pick, like, we don't even have to go to, say, quarterly charts over the course of time to go find that, right? If you just want to use classical technical analysis. But remember, we talked about the cup and handle pattern that was out there that could fire, and it was in so many places, and it really has started to fire. We've been over this many times, but these lines up here are kind of like the bigger picture lines, that if this really is a legit bull market, that I would say that that's going to be one of the first major stops for it, in terms of, if it keeps developing, you're going to get up somewhere into the sixes, right? Probably in the SPY. We obviously do this incrementally. That's the way I like to do things, and I don't like to get too far ahead of myself. A lot of things can happen with forecasts, so a lot of things can change, dynamics can shift, and most of what we do is in the here and now anyway, in terms of shorter term trading, and most of the services that Greg and Ryan, myself, and my son help out with. But with respect to the nearer term, I've been using this line here, and as my upward line for the channel that I think the SPY is operating in. And even that channel has room to get to it. It's not a ton, right? It's probably like another 3%, roughly speaking, as of right now. But giving you a little bit better visual, hopefully, clarity on that, I've got this pink line here that was orange last week, but I really wanted to emphasize it this week. And the reason for that is because that's really kind of I'm ballparking that as the mid channel. And so we're still below the mid channel, the way that I'm looking at it. And so because of that, right, that really is the first hurdle. So you've got to probably, right, on Monday, you've got to start getting above 512 and holding above there before you can really then take the next leap. This has kind of kept it in check. It's been supportive at times. It's been served as resistance or nearby to resistance. So I think it's got some validity to it. And this would be the stopping point in the near term. It all depends on the path, right, that the SPY takes. If it goes directly up there on Monday, or, right, if we do have a pullback and then we try to get back to it later, right, that it has, potentially more upside. And the channel itself, the real upper boundary in white above there, that would also, of course, gain more potential because more time is dragged on, and that's the way lines operate over time. So that's what we're looking at. So that's one reason why you hear me say that or see me write that in different things. I still think even in the short run, there's more potential here, but I don't want to confuse anyone and say, well, what happened to the DEF CON? If you look at last week, I said, raise your DEF CON, and we came in to last week, we had the Monday holiday, and then we had really, I think, 2 days of selling. And I think the market was, right, potentially in trouble. But as we alluded to, right, with the Nvidia, the Nvidia situation was the big wild card. You didn't know what they were going to do with it, right? You could say, well, in retrospect, it was easy. That's what everyone always says. It's kind of like, reminds me of when people say, well, everyone knows that. And I've seen people that were arguing vociferously for years that something wasn't true. And then they start to turn around and attack you and say, well, everyone knows that. That isn't news, right? It's just people just sometimes don't want to recognize certain things for whatever reason. But this could have gone the other way. I don't know what it would have taken to do that, but this was the perfect sort of bring in some new shorts. You're on the verge of cracking. Probably a lot of people were thinking something we mentioned. What if this is too well telegraphed? It's too easy to go along Nvidia, right? Because the momentum's there, everything looks great for them. It's too easy to go long it. That's something that some people may have thought of and thought they're going to really Shanghai rug pull everybody on that. But in fact, right, that really became the cover story to launch the squeeze. And I think what's interesting is, of course, that they bought up so many sectors, which I'll show briefly here, but they went after a lot of sectors. And the question I've got on our notes this week is, right, just because Nvidia launched this squeeze after probably, I think, a couple of days of distribution right at or right below support. I was watching it on the 3-minute, and I saw them really selling all near this level, right near 495-ish. And it was right, depending on what technique you want to use, you could have made an argument there was real support around there. If it cracked, it really could have brought about a trip to the 50 there in gold. But of course, again, that didn't happen. I'm just saying, why are you buying? Here's my question, which is a silly question. I know why they're buying it, but I'll ask it anyway rhetorically. Why do you start buying materials and industrials? Because Nvidia had this, tremendous news. But that's, we all know, if you've been around the markets for a while, it doesn't really matter if there's a direct relationship between what happened in Nvidia and the fact that they started buying so many other sectors and lifting them up as well. So I think it's a dubious way or reason to lift other sectors. But we know that that's sort of animal spirits type stuff that really drives, right, that. And you just see that in bull markets or bullish phases where they just kind of come after everything. And it may be stupid, as a lot of people are saying, the market's stupid, the market doesn't make any sense. But again, having learned it all the hard way many moons ago, I would say, it doesn't matter. Like, they are buying it. The trends are up. They've been up. We've been talking about how this market's been very resilient. They barely really didn't let much of a correction happen. A lot of the wheels of their story have fallen off, right? Mainly the rates lower sooner story's fallen apart to a large extent again. And the economy really isn't really isn't firing, right, the way I think the powers that be would have you believe. But in the face of all that, we always have to remind ourselves that the market is not the economy. And I think the answer really comes back to they're great at presenting a conundrum to people, and they get people effectively right confused. And then the market starts making these for many inexplicable moves, and people fight it, and that just feeds it. And a lot of things become a head scratcher, and so it's very counterintuitive. Uh, but underneath the surface of all this stuff, there's been, you can look into it yourself. I'm not going to get into the weeds, but there's been a lot of support by the government. There's been some sort of subtle support from the Fed, and there's just been a lot of liquidity, right there. The liquidity funnel or spigot is on, and this usually finds its way into the market, and then it confounds people. And so, this is why I think you have to just go with these charts when you're in the short term, and try to let some of that bigger macro stuff just stay there and appreciate it as a potential risk factor going forward, but not really a hindrance in the short term to your current short term or intermediate term trading, because the trend has been up, and we saw the bullish patterns, we saw the leadership area in SMH. And they've come after tech. It's the usual stuff, right? And this is what they do. It might seem shady, it might seem dubious, it might seem crazy that, right, so much money changes hands based on some of this really kind of silliness, but that's the way it is, right? So there's the line here for SMH, right? The leader. There's my immediate line that I'm expecting it to try to get to, if it can continue. And then, again, sooner you have a lower level. If I extend it out in time, naturally, right, you're going to have a higher level. So if there's a little pullback before they try to run it, then you have more upside potential, because you pause and or pulled back, and now you've got more space to work with, that you won't hit that. And again, there's no law that says you can't go above the line. It happens, but these lines over time are pretty good attractants. That's what I've found. A lot of people disagree with this approach, the classical just trend line approach. I disagree with them, but, in a friendly way. I would just say, don't use it then if you don't find any value in it. But I have always found value in these, and I feel like I've mentioned this on recent either cocktail hours or in some of the weekend videos, that somehow these lines find a way of mattering later. Somehow the market always seems to find a way before it's over to reach that line one final time. If it doesn't, it could be a signal, right, that there's a dynamic shift that maybe is happening sooner than one would have expected. But I've seen these just in an uncanny way ultimately reach these lines and then fall off. Now, there are some times when they do the old throw over and just pop right through. But that's a whole nother matter. You've got to trade it, when you start to see that come back into the channel. And that's when your corrective activity is usually starting. As long as you're outside of the channel, I would keep going with it. But as I noted in the notes, right, this is not the second inning at this point. I would say if you look at this, right, you're towards the latter innings. I do think that the next couple of months are shaping up as riskier ones. I think risk is going to come back into this equation. I think it's been a hell of a run, but I can't figure out at this moment what the catalyst would be, with EPS mostly completed by now for most companies, and then with the chip euphoria, right, and some of these extreme measures that we've seen. I really don't know what keeps you going. Now, it could be, the only thing I listed was maybe the government comes up with something. I mean, you're really 3.5 weeks still away from the FOMC. They have been using FOMC to rally into at times, but, right, I'm not so sure with the way the probabilities are stacking up and the way that some of these speeches have been made, and et cetera, that this really has that kind of power at this point in time. If something suddenly changes and we see a reason and rates start to really roll over, then maybe, right, that changes for March. But I don't know, other than maybe like the government pulling yet another get rich quick scheme for themselves out of and sell it to the public as beneficial for them. Other than that, I don't know what would really be the stimulus. I think there's a lot of, as I say, significant problems building under the surface of this. Mainly, they are that things are priced out of people's reach. Combine when you talk about the inflated prices in some of your big ticket items, the high rates that are required, the longer terms that are required just to even have still a very high payment. And I think really the job situation isn't as rosy as always, is not nearly as rosy as is trying to be portrayed. So there's a lot of issues there, and the market's doing all this in face of, and this is exactly why, right? This is common, right? I mean, in my 30 plus years of doing the charting, being an options trader, I would say it's there a lot where the market, if you want to try to assemble the market like a puzzle and have it all makes visual clarity and makes sense to you, you struggle a lot of the time. I don't have a good number to throw out, but I would say it wouldn't shock me if the market, quote unquote, didn't make sense to me, 50% of the time, maybe even more. Just to throw a ballpark, I really don't have a great number on that, but I mean, I find this a lot, and that's why we try to share all the time that just keep going with it, right? Because yeah, it doesn't make sense, but remember, if you got in here, and I know that there's some people that bottom ticked it and bought right there, but in all seriousness, if you got in and you've been along for a while, the reason why I wouldn't sweat anything is because you have the ability to roll. Okay, you have the ability to roll, and you could see the SMH, right? You could just to give you an idea, this is maybe the most important sector, a very large sector, and this thing really, in just over really a year's time, maybe like a year and a half, like you've more than doubled, right? It's more than doubled. So that's not common, right? To see that kind of a thing happen, but you should have rolled, and many times, right? If you wanted to keep playing this thing, or maybe even when you started to see the lower high get put in, you sat it out and waited for a breakout. But whatever the case may be, because of rolling, right, and the fact that you can collar and all the other things you can do, spread things off, whatever you want to do, you should not really fear that, right? That's what should liberate you and allow you to trade on the long side, even if you have problems with it. So I just wanted to mention that because we find that a lot, and it's understandable. Like I said, I myself many years ago, I approached things that way and had to learn not to, basically. So having said that, right, there's more upside here if they really keep this. We have a real bull market, and the bull market stays intact. But what I also want to show, which might be here. Let's see if, nope, that's not it. It could be here then. Yeah, this is what I wanted to show. And it really doesn't matter that I'm going to bring the spies up, but this is just one of my breadth screens. And I just wanted to show that, breadth really, in some ways, right, it's improving, but it's well off of its best readings and its best sort of complexion. And if you look at this, you kind of come back to here and you say, well, where were we, about a month ago? And here's your McClellan summation index. You're almost just about where you were a month ago. And you can see that from a month ago, we're up significantly, right? We went from about 480 to 510. So that's about 6%. So you're kind of flatlined on some things where you really haven't seen the market improve on these various measures, but the advanced decline cumulative average is definitely better. The percentage of stocks above the 50, 100, and 200, those are, since since, about a month ago, those are okay, right? Kind of neutral-ish. You're kind of somewhat neutral to up small and cumulative volume index. And your McClellan oscillator is a little bit better, thanks to the last 2 days of last week, but it's not really roaring, right? So there's a lot of things that are just not looking wonderful that way, but you have to note that the market breadth did improve last week. And going into the sectors just very briefly, because that's all I really want to show on those, is that if you look at these, right, they really came after. Here's your XLF. Now we had a couple bullish ideas in there. I don't remember when they expired, but this thing just kept finding ways to break out and go, break out and go. And so that put in a new high, right? They came after that. You could see with healthcare, they came in after that. Like that got driven up to a new high. They're trying to break real estate out like we talked about and hold it there. It's kind of working a little, but really not working in a big way. So I think there's a little bit of hey, let's keep an eye on this one. They did move their two darlings, which are XLC and XLK. They moved those right back up towards the recent highs. They're not there yet, but they moved them up. Energy did what it's been doing, which is confound people. I added a couple of ideas in there on the long side. Just didn't break out yet. Maybe it will, maybe it won't. But then you've got staples that roared. You've got discretionary that took off, right? And then you look at these two. Look at XLB and look at XLI. Right? These are both making new highs. So I just wanted to show that because that to me is important in the sense that it makes the market look better. But I would say, look, is that really a breadth improving? Is it really right to buy all these things off of Nvidia or Nvidia? So I don't know. That would be my big question. It seems like it's great justification to buy it, but in terms of really long-term positioning, if such a thing still exists, is that really something you want to do? And I'm very skeptical of that. So we'll see what happens on that, but I thought worth noting. So the summary would be, right, that I think your inflation's not dead. So I would keep your DEFCON up. Let's go back to a better chart. I would keep your DEFCON up, right? Even because I don't think I think we're in the latter innings of this particular move. Not that there isn't plenty more potential. We already saw that. There's plenty more upside potential in these things. It's just that the immediate upside, to me, is starting to potentially be limited. Not that there's not money to be made. I think there's at least 2 to 3% more if they want it. But I drew a line here for all those people that can't wait to short this thing. I think this is the most aggressive line I can get. So if you want to really go after it, I think you have to wait at this point you've got to wait for a close probably below Friday's low to come in, and then maybe you start to trade back down to the other side of the channel. But it's been a pretty tight channel now since the start of the year. Been a pretty solid one, and kind of bankable there. So I would stick with it until it stops working. But I'm not a big fan of the counter trend trade. I just wanted to mention that because I know a lot of people are probably thinking maybe we are getting there, and maybe we are. Who knows for sure. But if it can't take that initial resistance line out in pink and then work its way up to the upper line, to me, this is maybe a sign. So if you start to see this thing try here for a while and it doesn't pull it off, and you can't see any major catalysts out there to really spur the market, and especially if you see yields and the dollar suddenly catching a strong bid, right, that would maybe be a combination that would lead to maybe a short leashed counter trend trade here. But clearly, right, the trend is still up. Breadth better, more sectors participated. Some of our breadth indicators, they got a little bit better, but still they're a little bit questionable overall. But that's the look you've got right there, and there really isn't much to add about it, right? It's a very very, once again, more of a Shanghai maneuver where draw them in, mark up very quickly, and you really don't get any chance if you were waiting around for things to develop. But that's the reason why you have that economic calendar in front of you. That's the reason why you have the earnings calendar. We made it very clear that after Wednesday, you were going to be facing the wild card in our write-ups. I think in my videos or wherever I've commented, and I know Ryan said it, it was the real wild card of the week. So if you want to bet on that sort of boom or bust outcome, you can. But again, if you want to be prudent, you have to just say, well, they tried to crack the 20 in front of Nvidia, they couldn't. They really reversed it they came in with a very late bid that day, moved everything up, and then this is what you get. And that was really the Shanghaiing of shorts, yet again. And we've seen them do this many times, right? Where things are on the ropes. It's very, very common to see this type of stuff in a market that's acting as bullishly as this one continues to act. It's just not uncommon. It's a joke, but it's not uncommon. So that's my official opinion. It's a joke, but not that uncommon. So there's that. Let's review SMH and QQQ. SMH still has more room. I don't know if it'll just be, what will it be? The research reports, more firms coming out with upgrades. I don't know what would propel, the whole sector to keep going other than that, and the fact that maybe you're in a mini mania, maybe. So, but if there's more room there, if you want it, and you're not even really overbought, right? So if you're saying, well, no, it's already stretched. Well, it's sort of on the way to stretch, but I mean, 67 RSI, we've certainly seen a lot more stretch than that. QQQ, on the other hand, I think this might be a little bit ahead of itself. Let's see. I know I have the Qs are at the Qs are at 72 on the weekly chart on RSI. So on the daily chart, right, what are we at right now? Let's see. We're at 61, right? So these are not even overdone right now. So there's room there. I mean, you could just say it's getting stretched, yeah, but I mean, we all know that they can do a lot more than 62 in the Qs. So and that again is not uncommon. So there's room there if they want it. Again, I still think it's a very kind of point counterpoint time we've been in for the last few weeks. It just, right, you're kind of moving towards the latter stages, but you're not at the super late stages. There's still more upside targets they could hit. The catalysts are going away. I think the disparities continue to grow underneath the surface of the market. The Fed doesn't seem like they're on the way to rescue, really, maybe until the summer, which is longer than most of these storytellers would have told you, well, a year ago, 9 months ago, something like that. So, again, like what can I say about something that just made a new all-time high? So you've got that all-time high. It's the way this is all being done, it leaves a lot to be desired, but I find that to be the case a lot as well, right? Where this ends up happening. It's the trend, it's the mania, it's the FOMO, it's internal plumbing. But of all things, it's probably right, the liquidity and the psychology, all the liquidity that they're finding ways to get into this market, and the psychology that creates. Now, that's really what would be my main driver. There's money flowing into the market. I mean, that's and whether you believe it is prudent or not is a whole different story. The only thing I would mention is why I think the next couple of months could be problematic would really have to do with an off the radar thing. I don't know if there's like what it would be. Could it be a reckoning that, oh no, like this soft landing is not happening? Could it be, my gosh, rates are not going down and the soft landing is also not happening? Could it be just some complete international thing? Could it be a banking system problem? Could it be something that originates somewhere else, as is often the case in Europe or Asia, and it turns into a contagion? I don't know. I just feel as though we're going to conclude this run that we've had sooner rather than later. And then after that, whether that's this week, 3 weeks from now, I don't know. But whatever the aftermath of that is, there's going to need to be a reason for the pullback that I think will come. And I don't know how much of this will unravel, but I don't think that they're going to be able to keep this going unless maybe the things start bottoming out economically. The things that are not covered bottom out economically, and then those actually confirm that, hey, things are not worsening. They're actually starting to slightly improve. I think that would be probably what I would be waiting for to become more of a true believer. And remember, I'd still trade with this trend, but I'm just saying where I'd be like, well, yeah, that it all kind of makes sense now. But I just, again, I haven't seen that. The diamonds are a big laggard at this point. So what do you mean they're making a new all-time high? They are, but they just haven't ran as much. And I've got some levels up here, some projections, right? And right now, what I'm working with on this is that I thought I might have overclicked and gotten rid of a line by accident, but there really should probably be a line from here to right about, I would say right about there, solid. So I'm thinking this is going to, the way that this is lining up, this thing should be working its way towards 398.86, right? So basically 399-ish. So that's what, another 2+%, something like that, about there, about 2%. So with that in mind, that's where I think you've got a projection that makes sense, a couple of projections that make sense to me, lining up, dovetailing with each other, right below the big round number Greg likes to talk about all the time. That might be the spot, if they keep taking this up, that it will get to. In terms of breaking out, you can see like the 388.58. I just threw that there because it's close enough. Call it 389, whatever you want. But that level, that would be where I would expect there to be kind of if they do like a little bit more of a bump and then do a pullback, that would be roughly where we want to see them start to step in and support this. And that would really convert this from, I think, resistance to support. And then if they then start to ramp up again, right, then they're probably going for another run. But it wouldn't surprise me if there was a little bit of a pullback on some of these things, just because, right, so probably a lot of the selling that happened there was distribution from people that bought near these lows, as we said on Tuesday and Wednesday, before they pulled off the Nvidia shamalama ding dong reversal maneuver. And then they probably would like to sell. They probably sold out, is what I'm getting at. What they bought, a lot of what they bought here, probably would like to work it back down a little bit, then buy more so they can work it back up later and distribute at another higher level. That would be my kind of gut more than anything. But look, there's just more upside there. A failure to break out is going to or a real failure probably is that 20 there in light blue. IWM will chart it. I mean, this is clearly the laggard of laggards out of these major four that we chart and macro measure. There should be, yeah, there's going to say there should be a little triangle on there. So I think we're kind of getting into this little mini triangle area, and that makes it interesting. I've always liked triangle patterns because usually right before you, about 3/4 of the way through until you reach that apex of the triangle, this is pretty much where you should start expecting there to be a breakout or breakdown. So again, I would expect that if they keep the market running, those other indices running, you're going to see the breakout attempt, especially if rates are sliding. And yet another breakout attempt from IWM. And look, it's done what we talked about. If you look at the support, this was a resistance line here in white. You came back to there many times, even got below there. But this is really the kind of the discussion we're having, where you come back towards that level. The 50 came in and helped there in gold on the one I'm on now. This other wick is really right at the same level. Really, you're just right near the top of that candle, the bottom wick of that candle. So you've got that area. You could just visually see that is an area, and there's various forms of support, resistance in there. Breakout again, new high, pull back to it. Now they're trying to go again. right? And they ran into trouble. They looks like they might have closed this gap 20109, 20114. Yep. So they closed this gap. Now it's anyone's guess. Well, what do you do now? I think you just have to wait. And like I said, if the dollar and yields are rolling over and the other indices are rallying, I would be willing to trade this thing to the upside. And if you suddenly see the reversal of what I just said, then I'd be thinking, okay, this could break down. But remember, probably going to have support at the 50, right there. So this is not a great juncture. You can get in early, but what I think you have to do is, if you get a drop here, is get a quick roll in. So I just assume you're a 10 lot trader, something like that. I would say, look, you get a quick trim in of 2 of your 10. And that way, right, if you do hold support and go back up, you're not getting frustrated and you suffer decay and now you're a loser. You might still eke out a small little win and get ready to really reconfigure your approach, right? Whatever you're going to do. The one other thing I wanted to show before I wrap up here is, where is that? Let me see if I can get, is it there? It's not there, is it? No. Might just be one of these. Nope, that's my regular one. Is it this one? Is it this one? Oh, I'm getting bad. These are terrible guesses on what I'm trying to find for everybody. There it is. Okay, so what I wanted to show on this is really more of things like SMH, SPY, Qs, the biggies, and this is really my, not my dot plot, but it turns out to be that way. But the thing is, I'm trying to look at the distance from certain moving averages, percentage terms. And so I've got various SMAs that I track for this reason. If you look at the red dot, right, that's the 100-day. So right now, the SMH is about as stretched from the 100-day to the upside as it's been in a while. And to go back and kind of find a level that's higher, what I have to do is I've got to reach back all the way to, this is after the COVID madness, when the government started, I think, going bonkers. It was kind of the aftermath of that, when they went bonkers, and that they and the Fed, the estimates range mainly from $7 to $11 trillion, but some say it was only 5. Whatever the case may be, it was an absurd amount of stimulus, as they call it, and in various forms. And you had, again, that liquidity just finding its way into the market like it does. And you get this really extreme stretch from your 100-day, your 200-day in purple. That's what the purple dot's for. Right now, you're not so stretched from your 200-day. You're stretched, that's for sure, but it's not the worst we've seen. In terms of Thursday, right, with SMH, this was one of the most stretched readings, right? You'll see going back all the way back to, if we put our cursor up here, it really is maybe the most stretched that I can find in 8 years. Okay, so I just want you to know things like that. This is why I make comments about, latter innings and this kind of a thing. Here's another one of SPY. It's the 100 and 200 are up there, and the only times really that you saw greater than this was after this plunge, and then because the SMAs got pulled down in a big way, right? This is during the COVID year. Then because the SMAs are pulled down so dramatically, and then the money came in and they reversed everything so quickly and dramatically, you got massive stretch there. But otherwise, and then in the aftermath of that kind of, let's call it stimulus, but otherwise, right, during, let's say, normal times, which is a tough thing to really categorize in the modern world, especially in the stock market, you've got to go back to 2000, it looks like 18, that's not the aftermath of COVID, to the COVID response, to really find a reading where you're this stretch from your 200 and really this stretch from your 100. So that's the SPY. So just keep that in mind. These are some of the reasons why I don't show this every week, because these videos are already too long as far as most people are concerned. So I try to do what I can to combat that, but it's pretty hard if you're like me and you like to look at a lot of different things to gain perspective. But this is not horrendous on the Qs, but it's getting up there. But mainly SPY and SMH are both very stretched, and so there's a little bit of improvement with your breadth measures and sectors participating. I think it's a little dubious, right? I mentioned that about the sectors, but so again, it's point counterpoint, and that's it for now. I think we discussed, I think, everything that I wanted to cover. I think you've got to realize you got some rarities and extremes, and a lot of this, it's somewhat narrow, but overall it's also not atrocious, right? Because a lot of sectors have joined the party as of now. I think they're late. I think they're reactionary, but they joined, and I think it's probably not well-founded to do that for the long term, but for the short term, again, that's absolutely fine. The other side of it is that market breadth screen, which I think is it here. Yep. And like I said, the market breadth screen is really not confirming on everything, but it's also not atrocious. So you get more sectors, again, dubiously participating. You get a little bit of a discrepancy, but at the same time, a little bit of improvement. So it's latter innings. You have no signs that we're faltering yet. You've got to get some signs that we're faltering somehow, some way, to really, before you start fighting against this. The dollar and the 10-year yield, they're not breaking out yet. They're kind of looking sluggish and maybe even vulnerable to roll over. So, and you're ways away from your FOMC, but I don't know what the catalyst would be. And there's more room on the charts per the channels that I think stocks are operating in. So again, it's very point counterpoint, but right, I don't think it makes any sense for me to show up here and force on these strong opinions. I think you just have to, again, know where you are. Where are we? I talked about that last week. It's still there this week. Your DEFCON levels got to be got to have an itchy trigger finger to move that DEFCON level up. If you start seeing certain things in the market, inflation's not dead. You've just got to trade this trend, though. If the trend stays intact this week, I hope that people stick with it. I would if I were really active and had the time, but I'm, Ryan, Greg, myself, we're busy, really busy during the day with ideas and trying to come up with ideas and staying on top of the market so we know what's going on, that kind of thing. But I think that's a wrap for now. So I'm going to thank everyone for tuning in. I'm going to wish everyone a great conclusion to their weekend, and keep your game face on, because I don't think it's going to be easy. The next couple of months, I think you might get a final burst blow off on something. I don't know what that would be, but then after that, I do think they're probably due for some corrective action. It's just a matter of when the rally ends and the corrective action starts, right? I don't see any signs yet. We'd have to wait for some cracking of at least some support for me to get lured into hitting the left click on the mouse and getting in something. I do position ideas in case we get caught off guard and in case things suddenly just unravel. But as is often the case during bullish phases, a lot of those ideas just are not really wasted time, but they never trigger. They never even sniff the trigger. That's just part of it. But you got to prepare. You just don't know for sure at any time. So everyone, take care. Have a great trading week ahead, and thanks again. Hope you got something out of this week's video.